What's up, everyone? Welcome back to another video in my PrimeXBT series. NebraskanGooner here, and today I'm going to talk about why it's so important to trust your analysis and trade your setups. It's really going to help with your psyche. So we're going to go over that here in just a minute. But real quick, shout out to PrimeXBT for sponsoring this awesome educational series. I think they've been sponsoring me for over a year now, and I've got tons of videos in the playlist. So make sure you check them out. A lot of risk to reward, position size management, and things like that for leverage trading especially, but they go along with just trading in general. If you do want to check out PrimeXBT, they have an awesome exchange. Unfortunately, US residents aren't allowed to use it anymore, so you would need a VPN or something of the sort if you wanted to go that route. But otherwise, if you're overseas, you can use the exchange. They have a mobile app, and if you want to deposit, you can get up to $7,000 bonus by using my link below in the description or on my pinned tweet on Twitter. Anyway, let's go ahead and jump right into the content on why you should take your trade setups. Let's get into this video on why you should take your own trade setups and how it helps your psyche and keeps you from getting wrecked, honestly. Real quick though, make sure you smash the thumbs up. Make sure you subscribe to my channel if you don't already. I appreciate it. But the reason we take our trade setups is because we don't want to FOMO in late after it works out, and we don't want to get chopped up, because there's nothing worse than thinking that the market's going to bounce or dump and you don't trust yourself, or you close early, or you get shaken out, and then it goes in the direction you thought it was, so you get in, and then it goes the opposite direction, you get shaken out again, and then it continues to go in the direction you thought, and all that time you lost money while being technically right about the direction of the move. So here's a great example. And I actually have a lot of videos on different setups, so make sure you go through my videos, because the other key is you have to be taking your trade setups, but they have to be good setups. If you're taking poor quality setups, then it's just kind of a mess anyway. If you're taking high quality setups, you start to take them more often, you start to be more consistent taking those trades, and then you'll see your profitability increase. So that is the first key, is finding good high quality trade setups. And then secondly, you have to take them and trust them. And thirdly, if you're going too big into these positions and getting shaken out, you might lose money. Whereas if you just went a little bit smaller, use a little bit wider stop loss, trusted your trade a little bit more, then maybe you'd actually make more money. There's nothing worse than trying to make big money, going too big into a trade, taking a loss and a big loss, and then having it go in the direction you thought. When if you would have just used a smaller position size, you would have been okay holding for that drawdown, and then you would have actually made money in the end. And in the long run, this is how a lot of people lose money, whereas if they just went smaller on positions, they would actually make money. So instead of trying to go big every trade and hit a home run every trade, sometimes you're better off just getting those small, consistent wins and making more money in the long run. But anyway, so I do a video on how to catch these trades, but this is a great one, and I'll show you the example of why you got to take your trade setups. But basically, we had a fake breakout. We closed below, and so I just shorted, right? Great setup. Again, I have a very detailed video on how to do this. It's in my BitGet series. It's called Identifying Scam Pumps in a Bear Market, if you want to go watch it. The problem here is a lot of people either go too big and then it bounces on the open, or they just don't trust themselves and they close out, and then what happens? It goes in their favor. And they do this over and over and over, and it messes with your psyche, because now, let's say that I really want to catch this trade. It's a great setup, but I'm like, I'm not going to get in right now for whatever reason, right? And it starts to drop, and I go, oh man, if it bounces, I'll get in. Oh no, it's down lower again. If it bounces, I'll get in. And then it just keeps dropping, and then I'm like, oh, I could have made so much money. I missed out on this trade. I'm an idiot. Why didn't I take it? Well, look at this daily candle. This is terrible. I gotta short. This is gonna nuke right away. And then you go big here and you're left taking a loss. And that's what happens to a lot of people. Or you feel like you need to make up the money that you would have just made on this trade. And now you're like, I got to find a trade somewhere. I got to find a trade. I got to find a big trade. And what happens? Ethereum and the rest of the market goes sideways for a few days now, and you're not making any money and you're getting chopped up in this mess. Rather than if you would have just taken this trade, you could have been like, okay, I got my entry here on this retest. I'm in. Now what do I do? It hit support. There's no follow through. Do I close? Do I hold? I'm in nice profit. Can I put my stop loss at break even? Can I put my stop loss into profit? Can I take some profit here? Do I just close out and say, screw it, I'm done for the weekend, right? And this was on a Friday, and that's exactly what I did. I said, all right, I'm closing. See you later. I'm not going to look at the market for a few days. And I came back to absolutely nothing and did not regret closing one bit. But now my psyche is intact. I came with a fresh look at the market. I had no emotions when I sat down. I wasn't trying to make back gains. I just trusted my analysis, and it was worked out. Now, it's not always going to work out. I will be wrong. But that's why I use stop losses, and I could have said, all right, my stop loss is up here. I calculated my risk before entering this trade. And basically what I did was I just entered the trade and didn't even look at the chart for 3 or 4 hours after, because I just trusted my analysis. I actually went to bed with this trade and with a wide stop loss. Now, if I went too big into it and I had to put a tight stop loss or was nervous about sleeping on it, maybe I would have gotten wicked out overnight. So the key here, you guys, is you have to keep your psyche intact when trading, because if your psyche's not intact, then you're going to be taking emotional trades. You're going to be chasing trades. And if you're not taking your setups when you see them, if they're high quality setups, then you're just going to be chasing and chasing and chasing gains, and you're just going to be taking losses. All right. So if you see a really clean head and shoulders, or you see a really clean flag breakout, okay, or anything, if you see something that's very obvious on the chart, find a setup for it and take it, because over time, these high quality setups are going to produce money because they will have a better reward than risk, and they will have a higher probability of being right than wrong. So if you're only taking 1 out of every 5 trades, okay, and here's a quick example I'll use before we cut this brief video. I hope you guys are enjoying so far. So let's say you have 10 trades here, okay? Loss, loss, win, loss, win, loss, win, win, loss. 1, 2, 3, 4, 5, 6, 7, 8, 9. And we'll do this one as a loss, okay? Now, if your risk to reward is good, then you can lose 60% of your trades and still make money. But what you can't do is pick and choose your entries on these setups, because if you choose wrong and you're just going big occasionally, right? Then what if you lose on this one? There's too much randomness now. So you have to play it consistently, consistent position sizes, consistent setups that are high quality, and over time your risk to reward will outweigh your losses. Your percent, and maybe you go on a run where you win like 50, 60, 70% of your trades, which there is strategies out there that will win 60 to 70% of trades, okay? But the key here is you can be 30% win rate and still be profitable. And I don't think a lot of people understand that, but you have to play and play consistently. Because if you're just guessing, let's say you're like, all right, I'm only going to take 5 of these trades. And then this time you take this one. Whoops. Okay. So it's a loss. And then you take this one and it's a loss. And then you take this one and it's a loss. And you're like, well, I guess I'll take this one. Okay, you got to win now. And you take this one, it's a loss. So you took 5 trades, but your win rate was only 20%. Whereas if you would have taken all 10 trades, your win rate would have been 40%. All right. And so that's increasing your win percentage, increasing your profit. All right. And it's just a complete randomness. You have to take away all of the variables to be profitable in these markets by being consistent, because there might be times where you just pick and choose because you're emotional and you hit only the losses. And I've had that happen before where I'm just like, oh, I'm being careful. I'm not taking some setups. I'm being skeptical. And then I'm like, the ones I do take are the ones that aren't working out. And the ones I don't take are the ones that are working out. So the other end is if you're just going into these setups and you're trading altcoins and you're basically going all in on every single one, it's best to diversify. Okay. And if you find 10 good setups, maybe that's a lot of setups. Let's do a little bit less. Okay. So let's say that you find 5 good high quality altcoin setups and you're like, oh, well, this is my favorite one, so I'm just going to go all in here. All right. That one gets stopped out. You had a 50% win rate on the other 4. You guessed wrong. So rather than guess, okay, because we don't know which ones are going to work out, the ones that look the best don't always work out the best. So I'm going to put 20% of my position allocation into each one of these. Okay. And all right, I take a loss here. I take a loss here. I take a loss here. And each loss, let's say, is 2%. My risk on these 3 trades was 2% on these 2 trades as well. So 2% on each one, but my reward was 10% on each one. And guess what? So I took 2% loss, 2% loss, 2% loss. So that's 6%. But then these 2 trades worked out and I made 10% and 10%. So minus 6%, okay, plus 20%, which is terrible writing there. There we go. So you can see here, minus 6% plus 20%. That is a total of 14% profit, okay, while having a less than 50% win rate. So that is how you get rid of the random variables in this. You stay consistent, you get rid of your emotions, and you conquer these markets. It's the only way. Thank you so much for watching the video, everyone. If you liked it, please give it a thumbs up. Make sure you're subscribed to my YouTube channel. I am so close to 30,000 subscribers. So thank you, everyone. I really hope you enjoy all of the educational content, and I will catch you next time. Peace.